Hey guys, I just finished listening to the Q2 2021 Airbnb earnings call. And as always, I'm going to go over some of the main numbers and then give my key takeaways at the end of this video. For the purpose of this video, I'm just going to compare everything to 2019 levels because 2020 was basically a lost year for Airbnb. So it doesn't make sense to compare anything to 2020. So it just makes sense to compare everything to 2019. So before we get started, price of Airbnb right now is $144.38, which is down 4.5% after hours. So the market doesn't really like this report. Let's get into it. So main numbers, experiences and nights booked, 83.1 million compared to 83.9 million in Q2 2019, which is about flat. Revenue came in about 10% higher compared to Q2 2019. Revenue came in at 1.3 billion, which is compared to 1.2 billion in Q2 2019. Net income came in at negative 68 million compared to 297 million in Q2 2019. And adjusted EBITDA came in at positive 217 million compared to negative 43 million in Q2 2019. Adjusted EBITDA doesn't include stock-based compensation, which does take away from net income, but it doesn't hurt the balance sheet. These numbers are pretty good. I think that the adjusted EBITDA and net income numbers are really good. It really shows that they're able to keep their expenses in check. One of the expenses to really pay attention to is their sales and marketing spend. This year to date, they spent $544 million on sales and marketing. They also said that they are going to have most of their expenses in the first half of the year. So by the end of the year, I expect the sales and marketing number to stay under $800 million. If you compare this to 2019, in 2019, they spent over $1.6 billion on sales and marketing. So this year, they're going to spend less than half of what they spent in 2019 on sales and marketing, while having the revenue higher than 2019. This is a super bullish sign to me. Going into these results, I wanted to see a couple of things. I wasn't too worried about revenue and net income, but what I really wanted to see was number of listings and hosts increase. Airbnb did mention that they had an increase in listings, and they also mentioned that their churn rate for hosts leaving has decreased. So that's okay, but they didn't really give any details of how many new listings they added and how many new hosts they added. And this is probably because these numbers are not that impressive, and maybe the investor community caught wind of that, and that's why the stock is down after hours. Airbnb tries to get around this by saying that, hey, we don't really need to increase supply in order to increase revenue because we have this new flexible booking tool, flexible search tool, where if somebody is looking to stay somewhere, but they're flexible in where they're looking to stay, we can direct that person where there is supply. So that's good and all, but I don't think that investors care too much about this because you can only do that for so long. You could only just point your excess demand towards your remaining supply for so long until you run out of supply, and then eventually you start losing market share to your competition. So in order for Airbnb to be successful long term, they really need to grow their supply, the number of listings and the number of hosts. So not great news when it comes to adding hosts and listings, but I'm still really bullish on the stock. One of the major themes of this earnings call is how the line between traveling and living are blurring. There's a lot more people staying at Airbnbs for stays over 28 days. When they first started the company, stays over 28 days wasn't even a thing, wasn't even on their radar. But today, stays over 28 days represents about 20% of their overall business. So this is basically a brand new untapped market, and Airbnb is the leader in this market. Additionally, we're still in the middle of a pandemic right now. It feels like it's never going to end, but eventually it will. Vaccines will eventually become widespread throughout the world, and those countries that rely heavily on foreign travelers will start doing better. Right now, North America and Europe are doing completely fine because they don't really rely on foreign travelers, but other countries, especially in Asia, do rely on foreign travelers, and right now those businesses are still hurting. So actually, it might be a good thing to see number of hosts and listings stay about the same right now, because we do know that number of hosts and listings will go up once the pandemic is over and those countries start opening back up again. And lastly, one of the things that one of the business lines that people don't really talk about is the experiences business line. Airbnb has an experience business line, and that business line is not doing very well right now because of the pandemic. And once the pandemic ends, the experiences business line will add hundreds of millions of dollars to revenue for Airbnb. So I wasn't really expecting a breakout quarter or anything for this quarter, but I am paying attention to the last half of this year. Airbnb has already guided that Q3 2021 is going to be their best quarter ever. They're going to have their highest revenue ever, and they're going to be the most profitable ever. So I'm still very bullish on this company. They do need to figure out their supply issue. They need to add more hosts and more listings. I do think that eventually they will figure it out. If I didn't already have a good chunk of money in this company, I would buy more. That's it for this video. Thanks for watching. We'll see you in the next video.